If you've been anywhere near crypto Twitter over the last couple of weeks, you've probably seen the same recycled narrative being pushed again and again. XRP is dying, no one is using the network, and the activity has collapsed, and institutions are losing interest. And as usual, these claims tend to surface right when price is under pressure. But today, we're going to slow everything down, remove the emotion and remove the tribalism, and actually look at what the data is telling us. Because according to on-chain metrics, the XRP Ledger has just returned to pre-Christmas activity levels. And that single fact quietly dismantles a lot of the loudest bearish arguments you've been hearing lately. In this video, we're going to break down what actually happened to the XRP Ledger activity over Christmas and why the drop was seasonal, not structural, and why on-chain data matters more than price in moments like this, and why periods like this often matter before price reacts. So let's get into it.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
Before we go any further, a quick thank you to today's video sponsor, which is Blowfin. And Blowfin is one of the exchanges I personally use for both my spot and leverage trading. And right now, they're offering exclusive sign-up and trading rewards up to 100,000 US dollars when you use my link. That's on top of their regular promotions, and as always, KYC is optional. The platform is fast, liquid, and designed for active traders. If you're already trading crypto, you might as well take advantage of the incentives that reduce costs and risk. You'll find my exclusive Blowfin link in the description of this video below. Now, let's get back to the data, because this is where things get interesting. Over the Christmas and New Year period, on-chain metrics for the XRP Ledger dipped noticeably, and that included transactional counts, active wallet addresses, and overall throughput. And immediately, social media did what social media always does. The narratives quickly became that people are abandoning XRP and that their network is losing relevance, and usage is collapsing. But here's the key question most people never ask. Was this abnormal or was it seasonal? Because if you've spent more than one cycle in crypto, you'll know that holidays distort the data massively. Christmas is one of the lowest liquidity periods of the year across TradFi, crypto, payments, banking, and on-chain networks. People aren't deploying capital, institutions aren't moving size, and developers and teams are operating on skeleton crews. Bots and automated systems are often paused or throttled. A temporary dip during this period is not a red flag. In fact, it's expected. This is the important part and the part that invalidates a lot of fear. As we've now moved out of the holiday period, XRP Ledger activity has returned to pre-Christmas levels. And that includes transaction volumes recovering, active addresses stabilizing, and network usage returning to its baseline. This wasn't a one-day spike. This wasn't a fake pump. This wasn't wash activity. This was normalization. And that tells us something extremely important. The network did not lose users. The network did not break. And the network did not experience structural decay. It simply slowed down and then restarted again after the holiday period. And that distinction matters more than most people realize. Here's where a lot of retail investors get it wrong, and badly wrong. They use price alone as their only signal. If price goes down, something must be wrong. If price is flat, nothing is happening. But price is a lagging indicator. On-chain activity is a leading indicator. Network usage tells you whether people are still building, whether transactions are still happening, and whether capital is still flowing. And also whether infrastructure is being used. And the price tells you what the market feels right now. And those two things often have a difference, especially during accumulation phases or sentiment resets, or even changing market structures. This is why you'll often see network activity recovering first, then followed by sentiment and how people feel, and then the price. The people who only watch charts miss this entirely. Let's address the narrative head on. If XRP was truly dying, like that Twitter is trying to tell you at the moment, you would expect to see a sustained decline in active addresses, a continued drop in transactions, and weak recovery after the seasonal events. That's not what the data is showing. Instead, we're seeing temporary slowdown, followed by normalization, followed by stabilization. This is not decay, this is resilience. And resilience is what keeps networks relevant through multiple market cycles. This part trips a lot of people up. How can the network be healthy if the price isn't moving? And it's simple. Markets don't price fundamentals immediately. They price expectations. And right now, risk appetite is selective, liquidity is cautious, and capital is being patient. Institutions don't chase green candles. They accumulate during boredom. They accumulate when narratives are quiet, and they accumulate when retail is distracted. Strong on-chain data during weak price action is often the setup, not the failure. This is not financial advice, but it is strategic context for you to listen to. But if you're holding XRP, this data suggests the network is still being used, the infrastructure remains relevant, and seasonal slowdowns are not structural threats. It also suggests that fear-based narratives, especially on places like TikTok and Twitter, are overstated. Short-term price action is not telling the full story, and long-term positioning should be data-driven, not emotion-driven. You don't need hype, you need signals, and on-chain recovery is the signal. Historically, this is the stage where loud voices get louder, confident opinions get more aggressive, and certainty increases right before it's invalidated. The market loves to humiliate certainty. And nothing creates certainty like short-term price weakness or loud social media negative narratives. But the quiet data often tells a different story. And right now, the quiet data says this: XRPL activity is alive and functioning normally. Now, zoom out. XRP doesn't need hype cycles to survive. It doesn't need viral memes, and it doesn't need daily influencer validation. Not from me, not from anybody. It needs network usage, infrastructure relevance, and institution compatibility, and regulatory clarity over time. On-chain activity returning after a seasonal lull supports that thesis. It doesn't guarantee price. It doesn't promise timelines, but it removes one of the biggest bearish arguments, that nobody is using XRP, because the data is saying otherwise, no matter what the haters are telling you. The biggest mistake people make in crypto is reacting emotionally to temporary conditions. Christmas was temporary. The slowdown was temporary. The narrative was temporary. The network, still here. Price will do what price does. Sentiment will swing and opinions will flip. But networks that continue functioning through quiet periods tend to matter most when attention returns. Watch the data, ignore the noise, and always ask whether what you're seeing is structural or just seasonal. If you found this breakdown useful, drop me a like. And if you want more data-driven XRP content like this, then please hit that subscribe button. Let me know in the comments, are you watching price or are you watching the network? Thanks very much for making it all the way to the end of this video. I appreciate every single one of you. Don't forget to go and check out the links that are over in the description. I'll see you on the next one. And remember this: the strength of the wolf is in the pack.